Welcome to the Del Walmsley Radio Show. Listen and grow as Del questions the status quo, encourages you to think differently, and empowers you to make a better life. Get ready as Del challenges core beliefs, seeks the truth, and reveals the roadmap to the lifestyle you really want. And now your host, multi-millionaire, national award-winning investor, CEO and founder of Lifestyles Unlimited, Del Walmsley.
Welcome to the Del Walmsley Radio Show, where the hype ends and the help begins. I'm your host, Del Walmsley, and as always, we're working on your financial freedom. Today is Tell Del Tuesday, and we have another great story brought to us by a gentleman that had come out of the military, went to work like everybody else, got himself a good corporate job, and was very successful. Then decided along the way, like many of us do, that there's more to life than just that. So here with us today out of Phoenix, Arizona is Mark Petz. Mark is currently somewhere around 3,800 units, so he's got quite the head start on the rest of us, and we want to talk about that. Mark, welcome to the show.
Thank you, Del, and it's great to be on the show and share my story. I appreciate that.
So what was it attracted you to lifestyles? You've already had success in real estate. You figured it out well enough, just like I did, to make some money with it. What made you look into us?
I knew real estate was good as far as getting into to grow your wealth and also for the tax saving. But I also had to support my family. You know, I'm married with two beautiful daughters. I needed to find a way to do both. And it's hard once your salary is pretty high and you need to kind of move into something entrepreneurial. So with Lifestyles, the beauty was I could kind of do both at the same time to get that job or that, new growth going with real estate. And after the 2-day, when I joined Lifestyles, that was the real eye-opener.
When you went to the 2-day, I always like to ask people, did you have any aha moments, that thing like the light bulb said, boy, that's what I've been looking for, that's it?
Having owned single family going in there, the first day learning about how to run single family correctly, it totally changed my mindset. I was into more the capital gains and appreciation viewpoint versus the cash flow. So that was a very big point. And then going into the second day with multifamily and learning how you have that forced appreciation with the net operating income and how it's run more like a business, you know, that right there appealed to me much more than just doing single family. So that's two of the biggest points that came out of that 2-day and just changed my whole way of thinking.
Did your wife attend with you or not?
She didn't attend that first one. I actually was in Dallas at the time when I joined and was moving for my corporate job. She was back in Phoenix, but she since sat in on a couple of the 2-day classes.
So when you came out, what was your basic plan? How did you see yourself entering into this?
So once I did the 2-day, I immediately signed up for the PIG membership, or the preferred membership, so I could do the multifamily. And I ended up moving as much equity as I could into passive investments with multifamily. I had a chance to go to all the local meetings in Dallas, meet the leads, shake their hands, and get to know them before I handed them, a large check of my savings. And just the whole experience was incredible. It was a little nerve-wracking the first couple of times, but after you talk to more investors in the room, you got comfortable with them, started networking with them, and the whole process became, it was very fun actually after a couple months. And, I realized that the system works. And so that's how I kind of got into that passive investment mindset.
Were you surprised when you first came in as to how open everybody was?
Yeah, it was the first couple meetings I went to, there's probably, 50, 60, 70 people in the room. And you start working, introducing yourself, and people were very pleasant, friendly, and you'd ask them a question, and they give you a very straightforward, honest answer. And you realize quickly that you can talk very openly about the numbers, whether it's how much they're investing or, specific numbers around, returns. Everyone was very open, and that was one of the most appealing, eye-opening, situations I've ever seen.
So what was your plan right when you came out of the 2-day? Can you give some little insight as to how you saw it working out for you?
Yeah, it was kind of funny. I know after the first day with the single family, I called my wife that night and said, we're going to buy 20, 30 single family homes. And then I did the second day and said, wow, this multifamily, I like this better. It's a little cleaner. It's, more units. So it's all consolidated. So really the plan was, since I still had a corporate job, was to be a passive investor. And that was really the path I went to the first 2-3 years, and realized how much I enjoyed it and that I could turn this into a business. And at that point, probably 2.5 years into it, thought, wow, I'd really like to be a lead or, general partner and syndicate my own apartment complex.
Now, 2015 to now, which is 8 years, you must have had quite nice profits coming out of some of the first deals you got into, I would think.
Yeah, the majority of the deals were in the DFW area because those were the leads that I was able to meet. And they all had triple-digit returns. They were cash flowing pretty well after the second quarter. And then, cash out refis and sales within that probably 3-4 year window.
How far in were you before you decided you had that little conversation with yourself where you go, wow, I think I can do this. In fact, I know I can do this. And then there's no lead compensation. I get the lead compensation. It makes quite a bit of difference when you move it over to your side of the ledger. Tell us how that came about and what you were thinking.
I would attend what the community has with Lifestyles, living in Dallas with all the members. You're able to talk with both passives and leads and engage with them. There's a lot of road trips, and it's a great opportunity to be able to talk to these leads, ask questions. So after a couple of years, I realized, wow, I could really do this. At first, it seemed like it was quite a lot to overcome, but I got comfortable with it, learned more and more the more I invested, and was able to make that transition. I talked to my mentor at the time, J.B. Durham, and talked through the process and decided that this was the direction I was going to go, and started working on the education towards that path. And then at the same time, was planning on moving back to Phoenix back in 2017. And that's what really, once I got settled back in Phoenix, I had the knowledge, I had the experience, I had the community behind me and the education. I was able to move forward and start looking for that first property, which I ended up closing in 2018.
In my mind, I envision that there's a pretty tight group of people out in Phoenix.
Oh, absolutely. It's been growing leaps and bounds. Every meeting when we have either a case study or road trip, it's amazing how many more people have joined Lifestyles, and it's great to have the opportunity to talk with them and kind of hear their story and give them, share my advice or, my experience as well. And that feeling is fantastic.
Let's talk about this 48 unit that you purchased as your first deal. Tell me what it was about that one when you saw it that you thought that's the one you wanted to start with.
Yeah, so it was interesting. I was ready to start engaging with local brokers and looking for properties. And then one of the LU brokers of Dallas had found a property, reached out to me, and we talked through the opportunity. It was called Wilshire Place, and again, 48 units. And we underwrote it, built our pro forma on it, ended up going through the process, making the offer. Very nerve-wracking your first time, but the good news was having a mentor, having a broker, and the support behind you, it made the process much easier, and ended up closing on that in 2018 for $3.7 million.
Now, what was it about this particular deal that you liked?
So the deal itself, it was in an up-and-coming neighborhood. It was in the price range target I was looking for my first deal. It had good cash flow. We were estimating about 8% at the time. And then within 5 years, just about doubling, all the passive investors' money. So I could kind of see what rents to expect, and then ended up, doing some additional renovations to grow the overall income at the property.
Okay, so you had a vision of what you could do with it. How did you buy it? Capital? You raised capital? You syndicated it?
Within Lifestyles, we network with passive investors, and I went ahead and did the offering with the SEC attorneys, and then passed that to all of the contacts on my investor list, and was able on that property, had about 50 investors, and we all pooled our money and were able to come down with get the equity raised fairly quickly and close on the deal.
How long did it take you to raise the equity for that?
Yeah, my first deal was about 2 weeks, and it's putting together the investor summary, talking to investors, and presenting what the opportunity was for them. It was exciting yet nerve-wracking, but I was able to raise the funds to close on the property.
It's amazing that first time thinking, where am I going to go get $3.5 million bucks? Huh? And then you go find it. It's a good feeling. When you decided what you were going to do with this property, did you consider it to be a value play or a yield play?
So it was actually right in the middle. It was getting decent cash flow. There was a lot of renovations done on it. And, I continued doing additional ones. I had to put a new roof in. And then I added some washers and dryers in some of the units. And then also did some upgrades, just basic stuff, cabinet hardware. Had to redo the parking lot, put up a new sign. It was a sad-looking sign, so that it was right off the I-17 artery, so there was a lot of traffic passing by. So having that sign helped a lot, and then just adding some additional landscaping as well, just to create that curb appeal.
As we come to the end of this segment here, I got to be careful that we don't overshoot it. But quick question: how much did you raise the rents across the board on this thing?
Yeah, so on that first property, we raised them around $200 overall, and it was pretty straightforward. We were able to, just with the enhancements that we made, we were able to bring that up and execute on our pro forma plan.
So that means that we had quite the gain as far as value. Did you keep the property or did you sell it, refinance it? What did you do with it?
Yeah, so the initial plan was to hold it for approximately 5 years, but we ended up selling it because we had pretty good equity gain in July of 21, had an overall 135% return, so about 2.5 years.
Excellent. Suppose that made your partners pretty happy?
Yes, it builds loyalty pretty quickly, and it's fun to kind of celebrate that once you close on the property and send all your investors money back. They seem to be pretty happy. You get a lot of good emails back, that's for sure.
Yeah, you get two types of responses. One, thank you very much for the money. That was exciting and great. Or two, what are we going to do with all this money? I need to find some place to put it. We're going to take a short break. We'll be right back with Mark Petz and the Del Walmsley Radio Show.
Teaching you with a roadmap to creating the lifestyle you really want. Keep listening. The Del Walmsley Radio Show returns in moments.
Del Walmsley on the economy and politics.
What happens if the economy turns around and goes back down now the Democrats are in power, or inflation becomes rampant and all of a sudden it becomes very difficult to do business? I was listening to an economist the other day, and he pulled out this chart of GDP. He said, look, here's what I want you to do. He said, tell me anywhere from 1950 to 2021 where the Democrats took power and where the Republicans took power. He said, point it out for me. And the truth of the matter is you can't tell.
If you're sitting on the sidelines waiting to see what the politicians are going to do, or waiting to see what the economy's going to do, if you're trying to predict the future, stop. Politicians and the economy have no bearing on your success or failure. Only you do. Register for the next live online free workshop. We'll unfold the map to retirement in 5 years or less, regardless of what's going on in the world. It's the same proven strategies we've been using for 30 years through every political party and economic cycle you can think of. Register at lifestylesunlimitedworkshop.com.
You're hearing the Del Walmsley Radio Show. Want more life-changing knowledge? Access our podcast and listen on demand at lifestylesunlimited.com under the radio tab. Now your host, Del Walmsley.
Welcome back to Del Walmsley Radio Show. With me here today on Tell Del Tuesday is Mark Petz out of Phoenix, Arizona. Mark is sharing with us about a 48 unit that he got 150% profit out of, which was a great deal. Mark, when you went to look for your second property, were you still in the first property, or had you sold the first and ready to move on to the second? How did you blend that next deal in there?
Yeah, so what happened on the second property, I still owned Wilshire Place, the first property, and the brokers who were involved in the first deal brought me one that was in walking distance, a 44 unit, right down the street. So it was a great way to consolidate those expenses and kind of have 100 units all within walking distance of each other. So it made a lot of sense. I could share my property management and, gain those economies of scale.
That's great. So was it same era type property since it's in the same neighborhood, same size? I assume it's about the same era, age?
Yeah. This property, the first one was in the 80s. This one was actually the late 70s, but, pretty similar. And the property itself was mostly renovated, about 90%. So it was a fairly easy transition. I finished the renovations on the interiors and did some exterior work as well, new signage, some new paint, and really just gave it that curb appeal. And then also helped with the expenses by filling in. It had two pools, filled in the one pool to create more of a barbecue picnic area for all the residents, and that worked out really well.
Two pools on only 44 units? Are you kidding me?
Yeah, quite the water usage. It was actually kind of two buildings next to each other that were similar with a pool in the middle. And since it was all one property, we really only needed the one pool.
What was the second pool for? I just got to know. It's one of those, when E.F. Hutton speaks,
it was,
I got to know.
It's just the way the layout was. You had 22 units that were in a U-shaped, and it actually overlooked a schoolyard, which was, so you had a nice view. But in that courtyard, each one had its own pool. So it just, we didn't need to have that. And plus those pools were getting pretty old and had constant leaks. So made a lot of sense to fill in the one. And I think the residents were happy with having a nice barbecue area. And also they could play cornhole as well and, have more of a engaged atmosphere.
No, I get the move. I just trying to figure out who was dumb enough to build two pools into 44 units, that's all, which was not you. So as you move into this thing, next question is, what happened to it when you sold the 48 unit next to it or around the corner from it or wherever it was?
Yeah, so what I ended up doing was selling both the properties at the same time to the same buyer. So that property I owned for about 20 months and had a 100% return. So I was able to double everyone's money who invested. I had a lot of the investors from the first deal and some new ones as well. Wow.
2 home runs in a row. That puts you right up there on the I want to be in your deals list. So what did you do next?
So after that, I started looking for my third property, and another broker brought one to me that was it was actually the Lifestyles brokers that was up in North Phoenix, so good growth area. This was more of a Class B minus. It was still 80s product, but a nice neighborhood along the mountains there. And this property I was actually bidding on, and then right before COVID hit, and I was in third place and didn't get the deal initially. And then when COVID hit, the first two buyers fell out of contract, and then I ended up swooping it up and getting it for another $500,000 lower. So it worked out very well, and we ended up closing that one in August of 2020. That was a 92 unit.
Wow, that's being the right place at the right time, huh?
Yeah, it really was a little nerve-wracking as we all look back 3 years ago on what was happening around us. But it was really having the confidence from, your recommendation and all the mentors and that support group around me gave me the confidence to go get this deal done in the middle of COVID, doing due diligence with masks on, and it all worked out. And I was, very happy to have that group. If I was a lone wolf on this, I probably wouldn't have pulled the trigger on the deal.
Sure. I mean, who would want to get into new business right when everybody else's business is going out of business? It's an obvious fear mode situation that most normal people would be in fear mode at that point. So to be able to do that allowed you to pick this thing up even cheaper than what, you had wanted to buy it before. So that's proper preparation prevents poor performance, or as some people like to say, what is luck? Luck is proper preparation meeting opportunity. So you were there, right place, right time, made it happen. How did we do on this one, on this 92 unit?
Yeah, this one was fantastic. We ended up, a lot of the rents were in the low thousands, and I initially was targeting to hit about $1,280, and we ended up over $1,500 by the time we sold it. So I sold that for, bought it for $12.5 million, sold it for $22.3 million, and had that one just over 2 years, and we had 161% return for all the investors.
Now that's really unbelievable. So you had over 100% value increase, and with leverage, that only came out to be 162% return?
Well, we had a pretty big CapEx budget on it, so we were doing a lot of renovations. We added washers and dryers in all the units and renovated the interiors. So we did have some pretty decent CapEx spend in the deal.
Gotcha. So we're looking now at 3 deals that are done, all of which have had over 100% return. You've got to be walking pretty big out there in Phoenix at this point. What did you do next?
Yeah, so after that, I liked the North Phoenix neighborhood, so I went for my 4th deal, and I closed that in September of 21. That was a 90-unit Class C plus, right off the 51 highway, so great highway access, great asset. This property looked like a disaster from the outside. The buildings were all different ugly colors, and it looked like a junkyard. There was broken down cars in the parking lot and motorcycle parts all over, which is a perfect property to go buy and invest in and work on increasing the value.
That's great. So let me see now. That was in 92, you say? I'm sorry, 2022?
Yeah, I closed on this property, 25 Greenway, in September of 21. And, so we closed that and got to work right away on all of the capital expenditures and improving the property, and jumped in and got new paint on there right away. And just that alone changed the whole look of the complex. And since then, we've done new landscaping, new parking lots, rebranded and created a new monument sign for it, added a unit, took the office out and added a 2-bedroom and created a new office, and also filled in a pool. There were 2 pools in that complex as well, and turned that into a barbecue area as well. And so the property's been completely transformed and is at 100% occupancy right now.
And now we want to talk about your 5th deal. What did you do on your 5th deal?
Sure. On my 5th deal, I realized that the submarket that my property was in is very low on inventory, and decided I would look in that area. And the same broker who brought me the 25 Greenway apartments brought me a portfolio of 165 units, all within a mile radius of that property. And so I looked at that portfolio, liked what I saw, good value add opportunity, and that was 165 total units under 3 properties that I ended up purchasing in March of 2022.
Now, let me ask you this question, Mark. Are most of the properties small properties? I mean, this is now, you've done 4. This is 3 more. That's 7 properties. They're all under 100 units. Is that the predominant type of housing in Phoenix, or is it just that's what you've specialized in?
Well, for me, that was what I ended up specializing in. Every time it was a very chaotic, competitive market in 2021, 2022, and I was invest in final for several properties that were over 100 units, and I felt like the winner of those properties overpaid. So I was able to find, these portfolios that made more sense on paper as far as the pro forma, where I could get a better return. So that's why I kind of stuck in that pattern.
I want to make a point on that, Mark. That's why I asked the question. And the point is, I have found it happened to myself. I've seen it happen to many, many other people here, that once you get into a size of an apartment complex, or you get hooked on single family, or you get hooked on duplex or fourplexes or whatever, you have a intimate understanding of what it takes to run that type of property, and you're successful with it. I don't know why, but brokers seem to gravitate to you. I mean, when I was running certain types of properties, the brokers go, yeah, that sounds like something Del Walmsley buy right away, and they just bring it to me. Do you find that to be true, that you've now been pigeonholed and they bring you this same kind of stuff because you're like the master blaster in that area?
Yeah, absolutely. Every time there's anything available within, a mile or 2 of that area, I'll get, 4 or 5 calls from trying to win that listing, and then, making me aware of it to, get me to the table on it. Gotcha.
All right. Well, tell us about this portfolio.
Yeah, so this portfolio, there's an 80 unit, and then there's a 57 and a 28 right next to each other. So I was able to put that, 2 loans on the properties, and really more of a value play. We did exterior upgrades, did a new roof on 2 of them, exterior paint on 2 of them, added some exterior patios. There were some single level casitas, so that created some value as well. And then the interiors, we're going through about 70% of them, doing adding washers and dryers and cabinets or cabinet fronts, and then counters, and then new flooring and stainless steel appliances. So it's been very successful. It's been a year so far, and we're seeing rent increases anywhere from $380 to $580.
Wow, that's incredible. So let me ask you this before we get kicked out of time here, and I haven't got into personal questions. Just out of curiosity, have you retired yet, or are you still working at your W-2 job?
Yeah, that's a great question. I was going to bring that up in 2020. Actually, probably after about 3 years of the passive investing, I was in a situation where if I got laid off or wanted to leave, I had enough passive income to cover my expenses. But since I had the time to do both, I did that up until 2020, and then my plan was to leave there. That was right on the 5-year mark. When I took the 2-day, you said 5 years, and it worked out in spades. And so I left my corporate job and actually became an LU mentor here on the national team. And it's been a great experience, and I love helping other members, get started and follow in my footsteps. And, that feeling of helping them is immeasurable.
So when you look at this, you've got 255 units here that are pumping out the money. And people don't understand that when you do this and you get that base income, it changes the way you see the world. And you start to think, okay, now what am I going to do with the rest of my life? So you have been willing to come and give back and participate as a teacher in this business. What's the future for you? You keep buying?
Yeah, so I'm kind of looking at 3 routes. Continue with passive investing, I'll continue to do lead deals, probably not as many. And then I'm also looking at an IRO deal as well. So it's really a lot of options now. I've got the money to make these decisions and kind of the freedom to make these decisions. So that's the direction I'm looking at probably in the next 3 to 5 years. And it's try and spend as much time with family and friends as possible, and do some traveling around the world as well.
How long have you been a mentor for Lifestyles?
For 3 years now.
3 years. Well, my friend, I guess you've got to the point in your life where you've had the enjoyment of helping other people, which is, I found, sometimes as satisfying, if not more satisfying, than closing one for yourself and knowing that you're helping somebody else and they look to you and go, wow, you've changed my life. Thank you very much. So we want to thank you for becoming a mentor and helping those people and perpetuating what we do here. For the rest of you out there, remember this. Me, Mark, and Leslie, we don't do this for the money. We do it for the lifestyle. Have a wonderful day.
The information and opinions you hear on the Del Walmsley radio show are those of the host, Del Walmsley, his guests, and his callers. The Del Walmsley show is for entertainment purposes only. Please consult a professional regarding your personal investment needs. Nothing presented on the Del Walmsley show constitutes an endorsement, recommendation, offer, or solicitation to buy or sell any product or security.